Good morning. It is March 20th, 2020. I'm Bill Conerly with an economic update, and I'm going to be going back and forth between some slides and some images. Uh, Let me get my video going here. There I am. I'm going to be going back and forth between some slides and some images. I believe that the United States has entered a recession. I don't know the depth of it yet. We'll talk about that. What I would ask you to do, though, is take a look at what's going on in the plan for this program. Let me, here, this is our plan of action. But I'd also like to invite you to take a poll. So the way this poll works is we're going to have, uh, here we go, polls. You're going to see on your screen in a moment a list of 5 choices about what is the possibility or how you're feeling right now about the economy. And the options are on a scale from 1 to 5. 1 is no worries at all, and 2 is mild worry, 3 is fairly worried, 4 is very seriously worried, and 5 is panic. And after you vote, you can you'll have to click down at the bottom where it says submit. And depending on the system you're on and the time lags, you may not be seeing the poll yet, but some people are right now. So take a moment as you're waiting for that pop-up to show and take a look at the plan. Um, we're going to talk a little bit about the stock market not being the same as the economy. I'll discuss sectors at greatest risk right now, lessons from the past, what we can learn about what's likely to happen, the possible paths for the COVID-19 disease and the virus that causes it, and the business implications. And some of you are still not seeing a poll, and I understand that. Let me uh, switch to, actually, I'm just going to pause because some of you are seeing it and some of you are not. But give me a moment, and right now we've got 20 votes in, and I think that's probably going to be indicative of the whole group. So the plan of action again, stock market is not the economy, sectors at greatest risk, lessons from the path, COVID-19 paths, and business implications. And because many of you are not seeing the poll, I'm going to end it right now, but I'm going to tell you what we're getting. What we're seeing is the most common answer is 3, right in the middle, fairly worried. The next most common answer is 4, very seriously worried. One person in a panic, few people with mild worry, nobody has 0 worries. And the way that works is the folks who are in a panic are too panicked to show up for a webinar, and the people who are not worried at all don't need to do a panic, don't need to do a webinar. So we're going to not be getting many answers from them. Let me begin by talking about the stock market. And I'm not going to give you an economic forecast, but I want to talk about the connection between the stock market and the economy. And when I say the economy, I'm thinking about employment, production, income, real activity, not financial activity. And on the chart, you can see annual changes in both the stock market and the real economy. One of these lines is much more volatile than the other, and you know which one that is. And what this says to me is that we should not get in a panic about the economy because the stock market's falling. Now, in terms of direction of causation, it is usually the economy driving the stock market, but it's not just the economy today, it's the economy and expectations about the future of the economy. And I believe that what the stock market is saying today is that the future sucks. All right. And from one day to the next, maybe it sucks a little bit more, maybe it sucks a little bit less, but generally it sucks. I hear people worrying that the stock market may trigger an economic problem. I believe the stock market is a reflection of underlying economic problems, not a trigger, except for a very small portion of the economy. Let me also mention that the news you're hearing is, oops, I wanted to go back. The news you're hearing is about the stock market, and it's about the sectors most severely hurt: bars, restaurants, hotels, recreation, theme parks, that kind of thing. And that general sector of the economy accounts for about 10% of employment, and it is significant. It's 10% of employment, but a smaller percentage of income because there are so many low-wage people there. And um, even though it's not as big a percentage of wages, there are obviously big economic impacts for those particular people, and they often have very little resources. So what you're hearing in the news is the stock market, bad news. You're hearing about restaurants and hospitality, bad news. You're hearing about deaths from COVID, bad news, but you're not hearing good news. And it's not that I'm not saying there's a lot of good news out there, but the business that's continuing, that's going on, routine work of the country that's going on, that is not in the press. Yesterday, my accountant says he's hard at work on my tax return. God bless him. And I also heard from my insurance guy, and he had looked at some quotes. So there are, in fact, people working. Now, the next thing I want to talk about is the sectors at greatest risk. And first of all, how the COVID um, 19 is um, affecting the economy. And there are four directions of change. Oh, and incidentally, some of you are raising your hands. I think you've got some questions. You've learned that if you mouse over the bottom of the screen, you can raise your hand, ask questions. I'm going to delay questions. I think there will be plenty of time for questions, but I'd like to roll through a body of content and then address them all at once. So I'm not able to watch what you're saying right now. The first of the virus impacts is supply chain failures. That's what we talked about a month ago when this was a Chinese thing. And there are still some supply chain issues where companies here in this country cannot get the supplies they need, whether it's from China or some other place around the world. But that is pretty small right now. The second one we look at for any epidemic is direct effects, and that would be something like the people who are sick not showing up for work, the people who are taking care of the sick not showing up for work, but that's tiny right now. I mean, yeah, it's an epidemic, but the number of people who are actually sick is small relative to the overall labor force. It's the indirects that are sending us into a recession at this time. It is the closures of bars and restaurants. It is the end of travel. And some of this is restriction by the government. Some of this is just good decisions by people saying, I don't want to get on a circular tube with 200 other people to fly to Orlando, even if hotel rates are cheap right now. So the combination of government closures and voluntary decisions is having a huge impact. And that leads to the fourth issue, which is the demand shock. The unemployed bartenders, waiters, cooks are not spending money on other things, and that has a ripple effect through the economy. My brother says that his favorite bartender is working from home, but my brother neglected to get the guy's home address, so he doesn't know where to go for a drink. Okay, that will happen here and there. To assess the impact of these various sectors, I went through an exercise looking at both GDP. Oh, and I'm showing a slide. I'm going to show a slide you can't see. Let's do that now. Um, there's a slide you can't read, but it's a list of employment sectors. And I did an exercise for employment and also for the GDP spending accounts. And I said, gee, what are the sensitivity of different sectors? And so I scrolled through like employment here, and what I looked at was whether we were getting, whether we were likely to get a big impact, a moderate impact, or a mild impact. And for each of these sectors, I coded them 1 for mild, 2 for moderate, 3 for severe. And in some cases, I wanted to divide a major sector into different categories. So retail trade, um, grocery stores, drugstores, they'll be mildly impacted, but nobody's shopping for furniture right now. And the same thing for trucking. Some of truck driving will continue as people deliver food and toilet paper to their local grocery stores, but nobody's moving refrigerators around right now. So when you add this, when I add this up, um, well, before I get the results, let me talk about some of the difficulties we have in this assessment. And it's a totally judgmental assessment based on my experience in the economy. But I look at things like manufacturing, and I wondered, gee, how sensitive is manufacturing going to be to this recession? Uh, and I've visited a lot of factories in the course of working with businesses. I get invited for a plant tour and I love it. And let me talk about the extremes that I see in the manufacturing sector. In a paint factory, I walked through the office section with the plant manager. We went into the production area and I said, "Oh, you're down today?" And he laughed and he says, "No, we're at full production." I didn't see anybody. He pointed out one person in a control room, another person way in the back refilling vats with some kind of chemical. And he said there was another person on the supply dock. 3 people kept this factory at full production. And that's pretty cool. But I also toured a fish packing plant on the coast, and I saw over 100 people standing shoulder to shoulder cutting up fish. All right, that's kind of a dangerous situation in the midst of an epidemic. Most of my factories tours, people are standing some distance away, plastics factories, lumber mills, that kind of stuff. So I think there's a moderate impact of what's going to be closed, but these calculations were done a couple of days ago before we had the full impact of the government mandated closures. So we've got Los Angeles and New York saying all businesses that are not essential close down. People can work from home, but don't go out. And that's going to make the situation far more severe in those communities, but it's not a nationwide thing. Nationwide, I think we have about 20% of the economy at severe risk, highlighted by the restaurants that are not open for business, bars not open for business. A little bit of moderate, but 75% of the economy, I think, is mildly impacted, mildly at risk. This is the large professional service sector, construction. On my way to the office, I drive past a home remodel that was continuing on, road construction continuing on, and the building of a new shopping center and multifamily facility. And the construction workers were there on the job, standing around not doing much, just like is normal at any construction sector. So there's a lot of the economy that is going through. The next thing I wanted to do was see if we could learn anything from lessons from the past. And it called to mind a book I read 2 years ago called The Fate of Rome. And the point of this book was that the Roman Empire's collapse, it peaked in like 250 AD, for those of you too young to remember, collapsed in early 400s. But this author's thesis was that after the Roman Empire controlled the Mediterranean, travel became much safer. ships went back and forth, and with ships and commerce and travel, there was an unprecedented level of foreign communication, foreign travel, foreign goods coming into Rome, and with unprecedented levels of global travel, you get disease. Does this ring a bell with anybody? I'm afraid it probably does. But the section that's going to be most important, I think, is of history, is what happened when we had the Spanish flu epidemic in 1918. It actually started early in 1918, went through 1920, and the peak was in November of 1918. And I find there's a number of deaths in the United States. I find it interesting. There was a little rise, and then everything calmed down. And then the big peak, with a peak in November 1918, that lasted about 11 weeks. And then it went real close to zero number of deaths. But then there was a subsequent episode, which I call a complacency peak. Think about that. It's not like there was a clear, all clear signal, but at some point, I think people stopped being concerned. So what did that mean for the economy back then? I want to look at another chart which shows the economy. We don't have the greatest data on the economy right now that we might have had, but what this chart is showing is the economy relative to a trend. So if the economy was on its blue line, it was trending normal growth. So if we actually had this showing actual numbers, the blue line is upward sloping, and we brought the blue line down to horizontal so we can easily see if the actual economy, the green line is above the blue line, we're expanding. If it's below, we're not expanding. And I've also showed the period of World War I and the flu epidemic. There was a little downturn, very brief, a couple of months at the beginning of the flu epidemic, but the economy was generally pretty strong. And a lot of this had to do with the war mobilization effort. The Army was buying supplies from business and sending people over to Europe. Then the economy I think some people are having a little trouble connecting. Sorry about that. I hope you're hearing the audio. Uh, so we have the economy going down right about the time that we had peak deaths. And then the economy declined, and we had about 9 months of recession, uh, bracketed on both sides by fairly good times. So a 9-month recession, and in terms of manufacturing and commerce, about a 9% drop in economic activity. This measure is rough, it's crude, we don't have great statistics from the time, but that kind of suggests the possible path of the uh, economy at that time. Um, so from here, I want to talk about the possible paths for the COVID-19 virus, and the paths for those possible disease evaluation will drive what can happen in the economy. So we'll talk disease and link that to the economy. If you want an optimistic scenario, this epidemic ends in 3 months. And the story behind that would be the virus is not transmitted anymore. We've done social distancing. We've pulled people away from each other. We've treated those cases that exist in such and isolated people so that there's no spread, and then the virus has nowhere to live. I think this is an overly optimistic scenario, but I put it out there if you're looking for some good news. And I'm not a medical doctor. The second possible pattern is that this turns out to be seasonal. A lot of things are seasonal. The flu is seasonal, colds are seasonal, a little bit of pneumonia is seasonal, in which case, as it warms up, and it's a bright and sunny day here in Lake Oswego, Oregon, as the weather improves around the country, we'll have less incidence of this disease, and maybe even milder. If that's the story, then we'll have a respite, but it will return in November. The third option I see is that this persists until we get herd immunity. And herd immunity means that so many people are not susceptible to the disease that there's no way for it to get passed around except in very minor levels. Uh, Not everybody may be susceptible from the beginning. There could be something in our genes that makes one person highly susceptible, another person not susceptible. We don't know that yet. Um, but we do know that it seems like people who have had this get immunity, but this third scenario, that is persistent until herd immunity, means a lot of people are getting sick over a couple of years, and this is the real serious scenario. And then the fourth possibility is we develop a vaccine or a treatment. What we've heard is that vaccines take 12 months, 18 months to develop. We are working on the scientists are working on some fast track tests, and we will maybe skip the usual vetting of new treatments and vaccines if we find something that seems to be working. But the most optimistic possibility is that we find a treatment. There are a number of drugs that have been approved for other diseases, found safe and effective. They're being tested on patients. And if we see that they are successful, not in curing the disease, but in mitigating the impact so people are less likely to die, and the people who get sick are more likely to be sick for 4 or 5 days rather than 9 or 12 days, then we may be able to approach something going back to normal. So let me give you an economic forecast for these scenarios. I think that first of all, if the first that it just ends because we've done successful social distancing, then we've had a 3, maybe 6 month recession. We go back and life is good. If we get a vaccine or treatment in the same period of time, life is good. So there's substantial possibility for fairly decent news. None of this is going to be good news, but not terrible is what passes for good at this time. The seasonal one means that we get a little respite. We don't know why we get it. It's just that the number of cases and deaths go down, and then it's back to a panic situation in the winter. So that's a negative scenario, one that would probably keep the recession going for over a year. And then the third one, persistent until herd immunity, that scares me. That's a Great Depression level of scenario. And the fourth one, the vaccine and treatment, sounds pretty good. It depends on how long. And there's no guarantee, of course, that the scientists will be able to come up with a vaccine or an effective treatment, but there's always that possibility, and we're going to hold out hope for that. Let me move to a business planning perspective for a moment. And here we go. What can you expect in your business? The first thing that I think companies should understand is that if the disease hits their employees, it will come in clusters. So you've got thousands of workers, and maybe you're going to get a dozen employees sick. It's unlikely that you'll get one employee over here and another employee over there and back different corners. More likely, you'll have a cluster of employees in one office who've been working together, and several of the people in the cluster get sick. So what this means is that a business needs to look at its critical functions. So what are the critical functions of a business? How about payment processing? You know, if you've got 3 or 4 people in the accounts receivable section, payments are coming in, they're processing that. What if 3 of the 4 people get sick? And one person gets sick, spreads it to the others, and you stop that. You wouldn't mind so much if it's a team working on a new product development or maybe the Christmas marketing campaign, but if it's a critical function, cybersecurity team, delivery team, I don't know. But look at your own business and say, what team, what group of workers would really stop this company if the disease spread to that area? And then the next business planning suggestion I have is learn your supply chain risk, because that is still an issue for that. The next item I want to talk about is strategy. And what most companies are doing now is, surprise, surprise, deferring decisions as best they can. I think that's wise, and but it's also causing some of the damage to the economy, because companies that are trying to keep doing business find that their customers are deferring decisions. But it's still good, good stress, a good approach. Building flexibility. Building flexibility is a concept close to my heart. A couple of years ago, I wrote a book called The Flexible Stance, Thriving in a Boom-Bust Economy. And I was focused on economic uncertainty, but also technology uncertainty, social attitudes, government competition. I should have thrown in potential for a global pandemic. But flexibility, how can we adjust to labor availability, labor unavailability, people not being able to work in the traditional way? What can we do about supplies, our whole supply chain? Can we deliver our services or our products to our customers? And then growth opportunity. Growth opportunity. Could there be a growth opportunity here? I actually think that there can be. Let me throw that slide back on there for those of you tired of looking at my face. And, you know, I'm also don't want you to see if I'm touching my face. I'm trying not to touch my face. But the more I think about not touching my face, the more my nose itches. It's like I go weeks at a time with my nose not itching at all. And then I think, don't touch your face. And, oh, twitch, twitch, twitch. Oh, my nose is giving me trouble. And I bet just talking about this is causing your nose to itch right now. I apologize. The growth opportunities I think of as 2 big categories. There may be others that you can come up with for your business, but the first one I'm thinking about is customers not being well served by your competitors. So think of the people, the kinds of businesses or individuals that you serve. Is there a way that you can provide better service at this time than your competitors are? That might be a way to build market share. And even if the sales volume is low at first, getting that person, that buyer loyal to you has a lot of possibilities in it. And the next one, I think, is employees. Is there a way to get employees to be interested in you? Employees who work somewhere else that you would have liked to have had. It was a tight labor market, hard to hire. So you're now saying, gee, uh, that uh, maybe there's an opportunity. So the and I'm sorry, I got distracted looking at the question. So let me go back to that. Even if you're not hiring, if you have identified people that might be good hires, if and when the time comes, then I would suggest that you pick up the phone and call them and say, hey, let's talk. We're not hiring now, but you're the kind of person I would like to have, I think. So at this point, I've got a couple of things that I want to talk about at the very end, but I'm going to pause here, take some questions, and let me add, for those of you who don't care to listen to all the questions, that you can send me an email afterwards, um, and check out my website. This video will be saved and put up on YouTube, and I have an article based on this webinar that is going to come out on my Forbes.com blog. And if your company or your trade association would like a presentation customized for you, reach out to me. So the first question I have is from my friend Jerry. Have you considered any permanent adjustments to the key sector of the economy as a result of this, uh, adding in oil and black swan events? Uh, Interesting question, Jerry. I think not. That my best estimate is that there will be a time when we're back to normal. So something I might wonder is, are people going to be afraid of bars and restaurants permanently? Well, maybe, yeah, maybe no. I doubt it. I think that when we get this disease as manageable as, say, the flu, then we're going to come back without a permanent adjustment. Denise asks the question, what about the airline industry? Can the airlines endure the extended slump in travel? If not, how will airline failures impact supply and resulting pricing? Um, and it goes on a little bit, trickle down to other industries. Good question, Denise. I think that there are going to be two paths for the airline industry. And one of them is that we will see airline bankruptcies, and the airline equipment will become owned by the current creditors, the bondholders, and short-term creditors. There'll probably also be some massive government funding for the airlines, some direct payment to them, just because that's sort of politically nice for the people in power. But I think that we'll get an airline industry bouncing back. May take a while, and in the recovery period, as we transition, I would expect, oh, and this is probably typical of other sectors as well. As we transition from epidemic mode to normal, there'll probably be very favorable prices for consumers as companies try to build up their business. But then I would expect prices to rise above what we think of as normal because of reduced supply. Some companies will have gone permanently out of business. That'll be true of airlines, hotels, restaurants, maybe even bars. That's a scary thought. Next question comes from Marcy. How is the drop in per barrel pricing for the petroleum industry impacting the economy? Good question, Marcy. The lower oil prices are filtering through to gasoline prices, and driving is way, way down. If any of you have been driving at rush hour, it is, I don't drive at rush hour, at least not any more than the 10 minutes it takes me to get to my office. But I listen to the traffic reports just as economic data, and driving is down. Industrial production is probably down, though we don't have the data yet. So demand is down, and that is fueling the drop in oil prices, much more so than the Saudi Arabia, Russia failure to get a deal. And part of that failure was driven by weak demand and expectations for weak demand. So what does the low oil prices mean for the economy. Consumers better off without a doubt, producers worse off. And what we have seen in the United States since we rebuilt our petroleum industry, thanks to fracking, is that when price changes, the first overall economic impact comes from the petroleum exploration and development activity, drilling wells, putting in the infrastructure to pipe oil from a well to a terminal. And that, so the drop in prices would be immediately negative for metal manufacturing, people making pipe, and people drilling wells, with a more calm but longer term benefit to consumers. So net net, it's about flat for the US, but the near term effects are more negative, the long term effects are more positive. And now Jeffrey asks, how do you feel the home building sector will do? Well, interesting. And answers to these questions would have been different a week ago, and they will probably be different next week. Right now, I don't think anybody's buying. I think that people are hesitant to go out and shop, and they're also worried about their own jobs, their own income. But mortgage rates never been lower, so that should be a positive. I'm guessing that developers at this stage, like today, March 20th, are going to be hesitant to make a commitment to buy land, sign a contract with the person who's going to do the foundation work, that things will be a little bit on hold for new projects, but that there'll be continued work on existing projects. I think house sales will decline short term, and that will delay developers building. So I think in the near term, this is the home building sector will be collateral damage, but I don't think it's going to be hurt as bad as many of the other sectors. A question from my friend Linda, hope you're well, is what I'm saying to her. Her question is, how well is the community banking community poised, since they'll be impacted as small businesses have to shut down for maybe a month? No loan payments and we'll need more. Trying to keep employees instead of paying loan payments. Yeah, I think that it's going to be tough for community bankers. They have been in very good condition in terms of loan losses, delinquencies. They've been really in excellent shape. But I think they're going to have a lot of delinquencies. Fortunately, there'll be some regulatory forbearance, but remember, as you well know, most of the bank examiners, a majority of them, were hired since the financial crisis, 2008. And they have an attitude in many cases that they need to protect the public from a bank failure, and closing a bank early or prohibiting additional extensions of credit are not appropriate. So I'm not sure that the banks will get that much regulatory flexibility. So I think this is a tough time for community banking. And in addition to that, no new deals. A lot of community banks finance a lot of real estate activities, and the new deal flow is going to be a little bit slow. And if you don't know how to ask questions, you mouse over near the bottom and there's a Q&A section, and that's what I'm focusing on right now. Oh, my old colleague Randy says, what's the impact of the $1,200 per person? We can test it out. You send me $1,200 and I'll tell you what impact it's having. You know, for some people, it will be, it means the ability to pay rent and to buy groceries. For many people, it means nothing. People who are working from home have stable incomes, are retired, so I don't think that's a big deal. And let me just throw some numbers out at you, because I know, Randy, you're a numbers kind of guy. U.S. economy, about $21 trillion in total. The restaurant and bar industry is about $1 trillion. So $1 trillion of stimulus sort of covers the damage we're doing to the restaurant and bar industry without the collateral damage to other industries. I am not looking for solutions from the government. I think that some of what they're doing, like the Federal Reserve, is not going to be negative, won't hurt, but I don't think we're going to get a lot of effective help at this point. Matt asks a question. At what point does a business consider layoffs, furloughs, or other overhead reduction for the business? My instinct is to protect employees, but the business cannot sustain losses if the business isn't making money. Yeah, Matt, that's a challenge. I was talking to a small business owner yesterday who has laid off 2 people, cut salaries for other. This is a person who's a supplier to the restaurant industry. And you know, sales down, not quite to zero, but pretty dang low. So I think every business owner needs to be sketching out a financial plan, looking at cash flow. And this is a day where you don't want generally approved accounting practices. You want cash flow, cash coming in the door, cash going out the door. And it is not too early to start thinking. Some businesses, of course, have already laid off workers. Others are thinking about it. But if you are not even considering some adjustment to your expenses, I think it's time to do that. Then Mitch asks, how do you think this will impact housing starts? I discussed that. Mortgage rate adjustments, I think they're about as low as we can go. Oh, but I'll go back to Linda's question about banking. Banks will be doing refis and they get some fee income for that. So that's going to be positive. Wayne, hey Sailor. Wayne asks, do you have views on best ways Congress can help mitigate the economic effects? Don't do anything stupid is my advice. If anybody from Congress is asking, nobody from Congress is asking. And I don't want to get too political, but our political leaders are not thinking very long term. And one of the things that I find frustrating is that that they're taking actions as if we were invading Afghanistan. And you know, Afghanistan gets invaded time and time again, and it's always a disaster for the invader because the invader never has an end game in mind. When is this over? And when are the restaurant closures over? When is the closure of non-essential businesses in LA and New York going to be over? When are the end of the sports games going to be over? And I think politicians should not do anything without a thought about when is the end going to be. Charlie, old buddy, asks, when the economy emerges from this downturn, how different will it be? What fundamental changes are likely to occur? Great question. And I think to piggyback on my answer to Jerry's question, I think the structure of how much families tend to spend on restaurants versus vacations versus Netflix will probably be about the same, but I think that there'll be an emotional impact. I think we see the impact of the 2008 recession in the behavior of millennials, that they are more cautious about taking on debt, hesitant to pay up for a car. Some of them don't have cars, but if they do have a car, more likely a beater than a fancy sports car like I aspired to when I was their age. And I think that people will also be more cautious about social interaction, shaking hands. We'll learn not to touch our faces. We will have learned, and I think we'll keep that lesson for a long time. But that's a good question, and I think I'll ponder that this coming week for another Forbes article. Somebody who is anonymous says, how about the cruise industry and resorts, Las Vegas? I think they'll come back, but it'll be longer. I think that the local bars and restaurants come back fairly shortly after the virus calms down, but I think it'll be a while before the cruise industry comes back. That's probably the longest one. Resorts, easier to do a little social distancing if you're at a resort or in Las Vegas. And the whole meeting sector, I do a lot of presentations at meetings, trade association meetings, as well as corporate board meetings, and a bank will want me to speak to their customers, and the whole meetings sector is collapsing. People don't want to travel. They don't want to be in groups. It'll come back, but I think it's going to be tough for a while. And that's one of the reasons, quite frankly, I'm doing this webinar, is to build my skills on the technical side and the presentation side of webinars, and to highlight my ability to do that. Hint, hint, hint. A local question here from Ryan. Oregon and Washington have been highlighted as ground zero of how the economy is affecting seniors, namely seniors housing and skilled nursing. It's feared that in the worst case scenario, it could wipe out a large amount of the silent generation and some of the baby boomers. In terms of Oregon economy, what are your feelings on the effect towards seniors and how our economy may be demolished based on less participation? I'm going to broaden this because we have people from all over the country on this, even though I'm in Oregon, and I believe there are some international viewers as well. So a comment on senior housing. Seniors have been resistant to going into senior housing. And as a person who is a few years out of high school, I'm sympathetic to that. And I think that will continue here, because we know that the biggest incubator of illness is school, and the second biggest is nursing homes. And the people in the senior industry have already seen, and when I say already, I mean like last year, folks in that sector were talking about older people staying at home longer than had been expected to stay. And the average age at which people move into senior living has risen. People are aging in place more often. And I think that will be accentuated, that people will say, hey, I'm staying at home as long as I possibly can. And so I think it's going to be tough for the senior housing developers, but also back to the real estate concern that many people had. I think it means that many houses that might have gone on the market are not going to be on the market because grandma's going to be living there. Let me scroll down for more questions here. And I thank you all for asking them. It's appropriate. Dave says, liquidity in the credit sector has been in the news lately. How bad do you think credit will get? As bad as 09 or 10? Or did we learn and change from that recession? Did we learn and change? Interesting phrasing. We often learn, we seldom change. So liquidity, I think in a pure sense will be fine. And I think that companies that are good credit-worthy companies will be able to borrow as they need. They may have assets that they can't sell right away, but they'll be able to get loans. The question in my mind is, who's creditworthy? Who's creditworthy? Are any restaurants creditworthy? Any hotels creditworthy? So to me, liquidity means the ability of a creditworthy family or business to get credit. But when the underlying business is not creditworthy, it's going to be tough. So that scares me. But I think the Federal Reserve will make sure that there's liquidity available for all good credit opportunities. Tom's asks, funding options. What is the desired balance between utilizing cash versus an untapped line of credit during an economic slowdown? We are a manufacturer. Good question. I would say if you have an untapped line of credit, talk to your banker. Bankers don't like surprises, but bankers like to make loans. And I would have an honest conversation about your upside, your downside, see if there's any worry on the part of the bank. And this is really good advice for any business that does have a relationship with a bank. Talk to your banker. The desired balance between utilizing cash versus untapped line of credit, I would again do a cash flow projection, but I'll tell you the truth. I think, I don't know your particular circumstances, but in general, I think there's a lot to be said for borrowing, using the line of credit, having the money in your account so that if anything changes, you've got it. And interest rates are so low, it's almost free these days to borrow money if you have the credit line. Arthur says the media has been driving opinions. Right now it's very negative. Um, not focusing on the positive, even though there's positive news. How long does this usually last before the media starts reporting on the positive again? I am not familiar with the media ever much reporting on the positive. I think that what's news is not people getting out of bed in the morning, going into work, doing a job. What is newsworthy is people not getting a job, getting laid off. But I think that if we have a reduction in the deaths in any particular state, that will become newsworthy. When people go back to work, I think that will be newsworthy. But don't expect a lot of that. Another question from an anonymous attendee asking about Oregon, Washington. What do you see as best, mid-case, worse for unemployment as of today? I think Oregon and Washington will fare about like the rest of the country. I would have said a month ago, I did say that Oregon and Washington a little bit more dependent on international trade. And when this was a China issue, we were worried about international trade. But now that it's a local issue about our local bars and restaurants and hotels, I think all regions of the country will be hit about the same, but not at the same timing. Hit about the same, but not at the same timing. So I checked, it's been a week since I checked, but Idaho had no coronavirus cases last week. They probably have some now. But I don't think any place is going to be immune, but I don't know that from a health standpoint, any place is going to be hurt any worse than others. Tom says, hey, any ideas about force majeure clauses in supply chain contractual obligations being invoked to legally slow down supplies and legally stalling payments? Yeah. I think that if you're an attorney specializing in force majeure, for those of you not into the, I think that's Latin, but there's a French phrase that's similar or vice versa. What it means is that in many contracts, a person, a business can be released from obligations to perform, to like finish a construction project or to deliver supplies, if there is some kind of natural disaster, act of God. And what I have heard, good interview on the Reason podcast from the Reason magazine people with Epstein, the law professor, who says this is a simple concept, but all the details of application are really, really messy. I expect a lot of litigation on that issue. New question, Dave, regarding home building and other construction. Will building material prices drop? Yeah, I think so. Not right away though, because I think current projects will continue, but there'll be sort of a hold on new projects being developed. And I think the folks who have the, say the lumber are going to cut prices to try to get that sold while they can. There's also a supply chain issue. I was talking to an apartment developer a couple of weeks ago who was asking his contractors what Chinese made parts are going up in these apartment buildings in the Seattle area. Well, Chinese construction materials. There's actually a lot of steel coming from China, but also what about light switches? The electronics in a stove. So there's a supply chain issue. But yeah, building materials price is probably going to come down. Um, how well is Oregon prepared to survive? Oh, Kathy, hey, good to see you. How well is Oregon prepared to survive COVID-19, and how will its economy hold up? We are in about the same condition as I think the rest of the country. Mike asks, what long-term changes will we see in how business is done? Will more people be working remote? Less emphasis in brick and mortar and retail space? Yeah, good question, Mike. I appreciate that. I think this has been an interesting experiment in work from home, and some people will love it. The technology has improved substantially. Like, one of the differences between now and the Spanish flu, there was no work from home. Well, not only was that not an option, but President Woodrow Wilson suppressed the news that we were in an epidemic for war morale. But I think that more people will think about working from home. Some people like it, some people don't, and will increase the number of options, and we're getting better at it. Technologically, we've been improving that. Zoom is great, Skype, FaceTime, those tools make it easier, but also just management. It's hard to be a manager, and managers, I think, are learning to work from home. And incidentally, I don't claim to be a management expert, but communication. More is better than less. So I think there will be a long-term change. Question from Jonathan. We have about 5 minutes left. Do you think the SBA disaster relief program targeting small businesses and now covering coronavirus will make any difference? Jonathan, I think the SBA program probably won't hurt. I don't think it will help much. I wouldn't count on it affecting the broad economy. Jeffrey, hey, good to hear from you. Unless the Fed backs up all the banks, large and small, to allow businesses to forego loan payments, there will be major carnage in the small, medium business world. Do you think a backstopping of banks by the federal government will come to prevent them from shutting down business? Yeah, I think that somehow we're going to see the creditors to small business helped. I'm not recommending that, not a policy recommendation, but I think practically it'll help. You think about the restaurant that's closed. That restaurant owner may very well not be making any payments on the rent. So this isn't a payment to a bank, but it's certainly a payment to a landlord. So that's going to be tough. I think that the Federal Reserve and the government in general will try to keep the banks functioning as best they can, but there's going to be a major sorting out of the losses from this. Dylan asks, is it more likely to be a 6-month or 12-month recovery? It depends on how the virus goes. It could be 6 months. It could be 24 months. You tell me what's going to happen on the disease. I'll tell you how long this will last. Todd says, with all the cash being pulled out of investment assets and put on the sidelines at the moment, where's all that cash go once we come out of this, and how do you see the yield curve and market rebound? I think that when people start feeling good, they're going to say, I can't hold money earning hardly any interest, so I'm going to go into stocks. Personally, I'm not going to tell you what to do. Personally, I've stayed fully invested. Brian asks, is it possible we may have already been in a recession, but this event was a catalyst? I don't think so. I believe that the economy was in moderate condition January and February, and that this virus did trigger a recession, which has begun now. Kyle, have your long-term growth projections for the U.S. economy changed as the result of this crisis? No, except for the first few years. So if you do a 10-year average, yeah, it'd be a little bit lower. But if you ask me what I thought about the period from, say, 2022 to 2032, it'd be about the same. Last question from an anonymous attendee. What do you think will happen with regard to immigration? I haven't thought about it. I haven't thought about it. Yeah, I think the question is attitudes about it. Oh, we do have time for one more. So my friend John, should we draw on business credit lines even if funds not needed yet? I'm not going to tell you what to do, but in general, think of it this way. Your business credit is very, very cheap these days. So I would kind of wonder why wouldn't you? Um, Finally, I want to thank you all. I'm on the wrong screen here. And encourage you to be in touch with me. I'd be happy to answer questions by email. Go to my website, conerlyconsulting.com, and check out my articles on Forbes.com. Thanks a lot. I appreciate it.